Is it better to have a low credit score in today's market to buy a home? That's the question we're answering today.
I keep it real, I keep it real, I keep it real, just keep it real.
Hey, what's up guys? It's Sam Hartman, Keeping It Real Estate in Fort Wayne, Indiana. And today I'm with Steve Hostetter at the Bailey & Wood Financial Group offices. How you doing today?
I'm great, buddy.
Awesome. So we've been seeing some headlines out there and they've been hitting the news cycle hard recently, but this is kind of old news a little bit. But the headlines are saying that higher, better, stronger credit score buyers are actually being negatively affected in today's home buying market. You're seeing those and hearing those and having those conversations?
Oh yeah, these things don't normally hit the news, but it's kind of fun to see it on Fox News so that folks know what's going on now.
And so it's making people aware, but it's not necessarily giving much clarity or context to what's actually happening. So yes or no question, is it better for a buyer right now in today's market to lower their credit score to get a better deal?
No, you're still better off the stronger your credit score is. So the better the credit, the better you are as a buyer. What has happened though is that they have kind of flattened the curve, Sam. So they being FHFA, Fannie Mae, Freddie Mac, who do all the conventional lending out there in the country.
So tell everyone, Fannie Mae, Freddie Mac, obviously you and I are very familiar with those entities. Tell everyone out there that might not have done a home loan in a long time or might be doing their first home loan. Who are these? Who is Fannie? Who is Freddie? Who are they and why do they matter?
Yeah, so they lend out the majority of the money that comes into the housing market for home buyers. So you never know about it, but if you go to any mortgage company or any large bank and you do what's called a conventional loan, which a lot of people have at least heard of, that is going to be money that comes from Fannie Mae or Freddie Mac. And so they are the money behind the scenes. There's no Fannie Mae bank out there that you go pay, but they're the money behind the scenes that funds a lot of the housing market.
So they play a big role because they have a lot of rules and regulations that play into that process that then you guys as a mortgage lender have to deal with, correct?
Yeah, they set all the guidelines. So they tell us, hey, at 5% down, this is what a client's qualifications are going to need to be, or at 20% down, this is what they have. And so, yeah, they set the rules and they tell us the pricing.
Okay, so Fannie Mae, Freddie Mac, credit scores, how now does this credit score high or low, or the changes that they've made, what's going on there?
Yeah, so where these headlines are coming from is that, let's say at the beginning of January this year, they came out with some new guidance that's being implemented. It's already in effect for all lenders. They came out with some additional guidance back at the beginning of this year saying that, hey, we're going to flatten the curve a little bit. The folks that, last year had really high credit, they got better pricing than they will now. So it's still better to have that high credit score, but it's not as much better.
So let's say someone with a 780 credit score, which is a super strong credit score.
Yeah.
Last year, a year ago today, they apply for a mortgage. They're basically getting a better interest rate a year ago, regardless of what's happened in the interest rate market. They would be getting a better interest rate a year ago and a worse interest rate today because of these changes.
Exactly right, because they actually, what they did was they made it better. So if you had a 620 to like a 680, that got better.
Okay.
So
let's.
I would avoid 780 because actually they over 780 very little difference. Under 780, like 779 down to like
it was like 750 or something, 700 to 750.
Yep. That's where they kind of really hit the folks.
Okay.
I would pose it as something like, so a borrower with a very good score, like a 760 that walks in today, what are they seeing different today versus last year?
So Steve, a borrower with good credit, say a 760 credit score, as they walk in today and apply for a mortgage, what's new to them today that wasn't the case a year ago?
Yeah, so while you still get better rates and lower fees if you have that 760 credit score than let's say a 620, then that's where qualification begins at a 620. Then you're going to be facing higher costs, and quite substantial in a lot of senses. So if you were borrowing $200,000, let's say, with a 760 credit score, you're going to have to figure out about $1,500 in additional costs today than you would have last year. And so there's ways that we handle that. You either collect that as upfront points, so increased closing costs that the borrowers have to bring, or we build it into the interest rate. So, it probably would adjust your rate a quarter point higher. So instead of maybe being at 6, you're at 6.25.
Okay.
And so, that's the conversations we're having to have right now.
Yeah, awesome. I love that practical situation, because really we can talk about credit scores, we can talk about new rules and regulations, but ultimately when it comes down to it, what's going to be coming out of a buyer's pocket with this new program? So you had told me before off camera, for every $100,000, a buyer with good credit, it might be looking at an additional $750 worth of fees that they're looking at.
Yeah. And what that is doing is, in some senses, subsidizing folks with lower credit tiers, because they've actually reduced fees for folks 680 to 620 on the credit score tiers. So, those folks from 680 to 620, lower credit scores, are getting better pricing today than they would have last year. And folks 760 down to 680 are facing worse pricing, everything being equal.
So let's summarize and put this all kind of on one page here of everything that we're talking about. So lower credit score people are getting better rates today than they were a year ago. We're kind of subsidizing those rates. Higher credit score people are getting a little bit worse rates than they were a year ago, but to have a stronger credit score today still gets you better rates than lower credit scores. That's right?
Yeah, don't go miss a car payment and call me expecting better rates.
Yeah. So, moral of the story is, guys, to have good, strong credit is always going to be more advantageous to you in your home buying search in the process of getting approved for a mortgage and getting the most advantageous rates. But due to some government changes and interventions with the lending institutions, those lower credit score clients are getting a little bit of relief from the fees that they're being charged to get their mortgage. So really what it comes down to is Fannie Mae and Freddie Mac have the goal of making home ownership affordable. That is one of their missions in their mission statement, and that's what they're trying to accomplish today. So if you have a high credit score, don't go doing something silly to make that credit score worse, thinking it's gonna help you buy a home. You're doing the right thing, you're doing great things. This is just something out of our hands, in the government's hands, and a change that we don't have control over, but we do have to live with.
Yep.
And so really, ultimately, what it comes down to is a case-to-case basis from client to client, right, Steve?
Yeah, and that's where having a lender that you have a connection with comes in handy, and a realtor too, because every loan is a snowflake, is what I like to say. They're all a little different, and you need to make sure that you understand and navigate it correctly.
And that's what it's all about. So what I hope today is that this helped create a little bit of clarity in terms of this situation. If you're seeing these headlines or hearing these things at your weekend barbecue or anything like that, so don't just read the headlines. Get clear, get the context. That's what we're trying to bring today. And if you have questions, if you're in the home buying process or thinking of getting in the home buying process, make sure you reach out so we can answer all of your questions and see what beautiful snowflake your loan might be. Awesome. Thanks a lot for the time, Steve.
No problem, buddy.
All right.
I keep it real, just keep it real.